Hey, what's up, everybody? So, two things I want to talk about. First, I'm going to start off with I've been getting a number of emails again recently from subscribers, followers, people who have been with me for a while, thanking me for how their results, their trading results, their whole entire perspective on trading has been completely transformed by my teachings. And a number of these emails have been along these lines where the people are talking about how in the past, they would get into a position and it would become a profitable position, and then they would quickly take a profit, and that looked good for a little while, and they felt very satisfied, but then they saw that position ultimately continue to move on in the direction that they thought. That built up a lot of frustration for them. Maybe then they would get, start to engage in self-sabotaging behavior. It's what I used to do, and then jump back in, totally unplanned, very emotional. Then it would move back in the other direction. Then they would jump out with a loss, eventually eating up the profit, or just sitting there watching it continue and having that eat away at them, And what I have helped them with was the concept of having an outlook and building a position. And, I've spoken a lot about, for example, how policy determines, all this economic data that we look at every month, which the folks who look at the data and think that, that is some sort of a forward-looking indication, very often they are fooled, and they end up, buying when they should be selling and selling when they should be buying. When I have said that it is policy, it is the people who literally have their hands on the controls, on the levers and the buttons that drive the economy. I mean, don't get caught up in this fantasy world of it's a free market. It's not. I mean, there is policy. All kinds of policy, monetary policy, fiscal policy, trade policy, foreign policy even, it all factors into it. And that is what creates the macro conditions, the basic conditions. And, because these policy decisions have to go through a political process, right? Policy has the beginning of that word, P-O-L, it derives from politics. Because it has to go through the political process, these are things that they take time to formulate, they take time to debate, they take time to eventually pass, and then once passed, it's very hard to turn them around, okay? You have to sometimes go through an entire new political cycle. In the United States, we have, at the very minimum, a 2-year political cycle because we have congressional elections. Then we have the big 4-year cycle where you have a presidential election and congressional elections again. So, I mean, then, you potentially change Fed leadership every 4 years, right? We just had a change. So, I mean, these things last. They last. It's not like, they don't say, okay, we're going to cut taxes this month and then we're going to raise taxes next month. I mean, every time they do something like this, right? Or we're going to increase spending this month, we're going to cut it next month. No, it lasts. It stays in place. And these are forces. These are forces. They're almost like physical. If you're thinking of physics, it's like inertia. It's like momentum, right? They stay in place. And people, a lot of times, they ask me, well, what price objective do you have, Mike, on this position we're in? What profit objective? You can't give a profit objective. First of all, the embedded fallacy in that statement is that I can predict the future price. I've never said that. I can only say, or what I have said, is that I understand the effect of policy on the economy. And so my price objective, I don't really have a price objective. I have an objective, and that objective is to remain in the position until the policy changes, okay, or until it nears the end of a change. You could kind of get a whiff of that. You could kind of get a sense of that by the national debate going on, who's getting elected, what they're talking about proposing, all right? But still, that stuff has to be debated. It has to be passed. I mean, so when you ask me what's the price objective, I don't have a price objective. I'll know when I know, all right? They'll tell me when it's time to get out. I mean, until they tell me it's time to get out, I mean, I'm listening to the guys who are making who they run the game, all right? When the dealer at the casino says the game is over, the game is over. If he says you keep playing, we'll still play. I'm playing the game. I'm not trying to predict when the dealer's going to say the game is over. I'm waiting for the dealer. He's going to tell me the game is over. That's it. That is my price objective, or that is my objective, number one. So the people now, they've been emailing me, Mike, I'm starting to get it. I understand. So these fluctuations against my position, which used to cause me so much anxiety and so much worry, and I felt like I had to get out and take that, they don't bother me anymore. I see the big picture. The big picture has come and become very apparent to me now. And that has given me so much confidence to ride through these swings against me. That's how the big money is made. All you little pikers out there with your little charts. Oh, it's crossing a line. I'm getting out. It's idiotic. It's so stupid. It's like you got no brains. You got no brains. You're little, you're pikers. All right, so that's number one. Now, and I'm always gratified by getting these emails. I really am. I mean, that's, people say, why do you do this? It's because of that. I get those emails. I'm helping people. I feel very gratified. Number two, something on a completely different note, more or less. Yesterday's yesterday's testimony, I should say, by the new Fed Chair Jerome Powell, right? It created a lot of activity in the markets. You saw the dollar get bid up. Stocks went way down. Treasuries went down. Gold went down. Interest rates went up. All this stuff going on. So here's the thing, and I wrote about this morning. When somebody like Powell speaks, if I were to use a metaphor to describe that event, I would say it is like somebody throwing a rock into a calm pool of water. The rock represents the words, the comments of a guy like Powell. When the rock hits the water, there's a splash, and that sends ripples out in all directions, and the surface of the water is disturbed. However, the water itself, the pool of water, represents a set of conditions, right? The water is a certain temperature. There's a certain amount of fish or life in there. The water has a certain composition. Those set of conditions do not change when the rock is thrown into the water, yet that's how people react. And the splash and the ripple, you could equate that to all the investors and the traders and who I like to call the zombies, who are just reacting emotionally and in an uneducated fashion, saying, oh, he just said this, we better do this, we better do that. They're not understanding that the set of conditions represented by that body of water have not changed at all, okay? So for a guy like me or my followers, yeah, that splash and those ripples, I mean, that moves against us a little bit. That gets us a little wet, whatever, but it doesn't change what we are doing. And what we are doing is ascertaining or evaluating the set of conditions represented by that body of water. And if those set of conditions have not changed, we are happy that the splash occurred and the ripples occurred. And of course, that represents all the clueless people just doing crazy emotional things. And that's why everybody but us loses money. All right. So that's what you have to look at. And that's the way, somebody said to me, hey, Mike, tomorrow is, or this week is the Italian election. It has so much risk. I've been through that. It doesn't have any risk for the euro. It has the same risk as somebody throwing a rock into a pool of water. Because nobody anywhere in Europe, maybe with the exception of Marine Le Pen, but she's no longer a candidate in France. She lost the election, but nobody is talking about leaving the euro. And even if they were talking about leaving the euro, that would have to be implemented. And even if that were implemented, you still have the ECB, who is the monopolist in the euro, who is engaged in deflationary, monthly asset purchases, negative interest rates, whatever. So the conditions in that pool have not changed. So things like Brexit. Remember when Brexit happened? And I told you the British pound would come all the way back to the pre-Brexit, which it pretty much did. I told you, went all the way down, crazy down. One day we had the flash crash and I was buying and, everybody panicked. It got crazy. You could have bought all the way down. You would have made a fortune on the way back. A fortune on the way back. You could have even bet on the zombie reaction too, but I choose not to because they're very unpredictable. I choose to bet with the set of conditions. And that is my objective. I don't have a price objective. You cannot have a price objective unless you're one of those, little pikers using charts and your little lines and your moving averages and your candlesticks and your crock pots or whatever else you look at. My objective is stay with the conditions. And when the conditions change, I change. All right, everybody? Have a good one. Bye-bye.